Hello, you're watching News.Markets. Social media plays a huge part in the business day as we network and keep an eye on the news. But could your investment prospects benefit from monitoring Twitter, Facebook and LinkedIn? A new report from the European Central Bank suggests it can. Quantifying the effect of online bullishness on international financial markets, which was published over the summer, concludes that social media can help predict the markets. Gareth Mann, no relation, CEO of trading.co.uk, joins me now. Thanks ever so much for coming in. So,
thank you.
It's okay to spend half of the day on Twitter, on Facebook, on LinkedIn.
Is it okay? Well, that's one of the benefits of the platform of trading.co.uk, that it actually monitors those channels for you and looks at signals to give you information around the equities market.
And you think that's going to help traders and help hedge funds?
Yeah, we believe it will. We believe it's only another tool in the tool set, but what it does, it notifies you when there's a change in volume, sentiment. You know, for a great example is the Alton Towers incident, the unfortunate with Merlin Entertainment. Our system picked that unfortunate accident up 4 hours before it was reported in the main news. Now, as a trader, that allowed you to make a timely decision on your investments in Merlin Entertainment, for example.
And of course, the reaction afterwards, when it wasn't the mainstream news, had an impact on the share price too.
Absolutely, and we saw a big drop off. It's the same at the moment. So we've got VW. We picked that story breaking up in its genesis. Everything that we monitor on trading.co.uk is event based, for instance. So we see a rumour develop into a bigger story, and that story develops. And again, if you have the foresight and you can see a story brewing, the earlier you make a decision on how you want to be positioned, the better you can maximise your profits or return or your strategy.
So it's interesting, the ECB's report that came out over the summer, they saw some real increases, didn't they, in share prices in the US, in Canada, in the UK markets. Talk me through the findings.
So their report was a kind of a very basic mechanism for testing it, based on the mentions of bullish and bearish in the markets. And then they correlated that across Twitter to identify the movements in certain stocks and certain markets. Now, their findings were actually quite accurate. They got some very good results. And that just goes, I think, for us to show the power of social media and content creation, full stop. Now we've actually gone further into bullish and bearish. We look at people, products of a company, the places they operate, the markets they operate in. And I think we're seeing those kind of consistent results of actually aligning ourselves to the movement in the market.
So you mentioned Merlin Entertainment. We've also mentioned VW and how you caught those stories before they came big news. Any other examples where social media got there first?
We saw a kind of a problem with Tesco's price. They've had a torrid time as it is anyway. And they were talking about banning fizzy drinks as a great example, especially Ribena, bizarrely. And as that story broke, there was a massive reaction and a negative sentiment in the market, and we actually saw a drop off. So there are plenty of examples on the platform and in the market of where social media, blog content has an effect. The trick is to know what to look for.
That's the trick, and that's, I suppose, where you come in. But it's interesting, do you think that more companies are sitting up and taking notice of what consumers want and changing consumer needs? You mentioned the Ribena Tesco story.
Yeah, we ran a set of data against all the supermarkets, the big brands, and we looked at how the tradable supermarkets engage with their consumers and how that was picking up revenues and pricing. And it definitely has a direct correlation, because if you can listen directly to a consumer group and how they interact with a massive brand, that gives you a good insight maybe to the outcome of their financial statements, how things are going within the business. You know, and I think that's a really powerful tool to understand. You can actually get feedback of a consumer for a product.
We've talked about theme parks, we've talked about cars, and we've talked about supermarkets. That's, you know, everyday stuff. Are there any sectors where social media monitoring doesn't really help with the broader trading strategy?
There's always opportunity. We would say in the lower volume stocks and the AIM-say stocks, it's not so powerful, because you just don't necessarily have the volume of content you would like to analyse. But then again, when there is a big spike in volume or conversation, that creates a huge alert and something for you to trade upon.
So it's all about spotting the hot stories, latching onto rumours and seeing if that can affect your trading decision. Gareth Mann, it's been a pleasure talking to you. Thank you.
Thank you so much.